Good evening, everybody. It is lovely to have you with us. I'd like to extend a virtual welcome to all New Zealanders who've joined us this evening. I'm Hilary Barry, and I'm excited to be your host, and we're delighted to have you here for the next hour or so as we talk about all things first home buying. I wanted to talk a bit about the purpose of this evening. ASB's Home Ownership series is here to help Kiwis get the most out of the housing market and navigate the COVID environment. We want to connect our homeowners and home buyers with industry experts who can help and answer your questions. You may remember last week we heard from Craig Sims and Nick Tuffley from ASB and Nick Goodall, CoreLogic's Head of Research, who gave us an insightful overview of the housing market at this time, which was really helpful, and we had a lot of fun too, and we're going to have fun tonight as well. Tonight we're going to hear from Craig Sims and Nick Tuffley again. This time we're here for our first home buyers, and we'll be joined by two special guest speakers. Louise Stiles, ASB Mobile Lending Manager for the Wellington region. She's going to take us through a step-by-step guide of the first home buying process. And Bryan Thomson, Managing Director of Harcourts New Zealand, who's going to share what's happening in the real estate industry at this time. So it's great to have everybody with us. Tonight is all about you, our first home buyers. So whether you want to know how to start with saving for a deposit, or whether you're ready to buy now, we've got you covered. Now, a little bit of housekeeping before we get underway. As an attendee, you will notice that you're on mute and your video is turned off. So you can relax and we can relax because we're not going to see or hear anything we shouldn't, just as well. Depending on what device you've zoomed in on, take a moment to find the Q&A function so that you can communicate with us live. This is a really important part of the process. So this is either going to be down there. So move your mouse around, find the Q&A function, or up here. Just go searching for it, and then you'll be able to send us in questions and communicate with us. Maybe you just have a comment to make. Maybe you just want to go have a nice day. But anything at all, just let us know, because we've got experts here, and we would love to assist with your questions for them too. Now, normally we'd be in a room together, and as your MC this evening, I would point out the bathrooms and the emergency exits. But since you're in your own homes, hopefully all tucked up and nice and cozy, you probably know where those are, so I won't worry about that. Right now, it is wonderful to have ASB's Executive General Manager of Retail with us this evening. Craig Sims has been with ASB for 18 months. Now, for those who don't know, Craig grew up in the mighty Wairarapa and is a keen rugby supporter, and he also once played for Wellington and the New Zealand Colts and Wairarapa Bush. It's a complete legend. Craig is joining us from his home in Auckland and will give us a brief overview of how ASB is here to help first home buyers. And remember, if you've got a question for Craig, pop those in the Q&A down there or up there. Over to you, Craig.
Thanks, Hilary. Yep, true rugby tragic if you can see the ears, everybody on the thing. So kia ora, and welcome to those who are joining tonight. If you're listening in because you're in the market for your first home, congratulations, that's an exciting time. If you've been looking for a while, you've probably noticed that there's a few things that have changed over the last month since we went into lockdown. In the last few months, it seems that anything that could have changed in the home buying market has changed. You've heard about the Reserve Bank changing LVR ratios. Banks are dropping their rates. COVID is impacting things for investors or the rental market. You add it all up, it actually creates some potentially exciting times for those who are about to buy their first home. For those of you who were planning to use KiwiSaver as your deposit, you would have had some uncertain weeks there during March and April when the markets were going through a bit of change, although we have seen some of those funds recover. ASB, through our KiwiSaver scheme, we've helped over 8,500 New Zealanders to get into their first home. So if you want to use that as a means for your deposit, speak to us because we can make sure that we can set up your KiwiSaver in the right way for your first home buying aspirations. Also at ASB, 1 in 5 of our home loans every month is actually for a first home buyer. And as we've gone through the alert levels, we've actually see first home buyers creep back into the market and a lot more activity starting to come out, which is great. I heard a great story, speaking of lockdown, from one of our bankers down in Dunedin, where she received a real great compliment from one of our customers In fact, she helped this customer out through lockdown to get her first home, completely remotely, of course, because it had to be safe. And when the branch reopened in Dunedin, the customer sent along a large cake. I think it was a chocolate cake from memory. And she was just really complimenting our banker in terms of how we really supported her through the delicate stage of getting her first home, across the finish line and into her first home. And she was just really pleased with that support. And I love stories like that because that's what we're here for at ASB. So we will be here with you for the distance, whether it's starting a savings scheme or working with us to understand what are the first home withdrawal options for your KiwiSaver, pre-approvals, through to settlement, right through to making sure your finances and insurances are all set up properly. And we won't just stop there. When you buy your home, we'll be with you afterwards to support you all the way. One of the things with COVID and everything else, I've heard a lot of people ask about, and even for my children, and so hi if they're listening in because I signed them up, they want to get on the property market, is what does all this loan to value ratio change or LVR change mean? Does it make it easier for somebody buying their first home? The short answer is it gives us all a bit of flexibility for people who have got less than 20% on the deposit. So I think that's great. What it doesn't mean is that banks are going to rush off and start doing no deposit home loans, because we've got to make sure that we're helping you to make good financial decisions for the long term. So it does mean, though, it frees us up to look at people who want to borrow up to 90% against the property. So if you've got a 10% deposit and in the right circumstances, then we can help you out. We know everyone's situation and aspirations are different. And so as you're going to hear from Louise and others, we've got a team of bankers here who can help you to work out your situation. And as you'll also hear tonight, the home buying journey doesn't start when you click on the property watch list. It starts when you think about what you want to achieve and then start putting a plan in place. So there's a lot of information out there for first home buyers. Sometimes it can be overwhelming, and we can help you through that with our bankers. We've also got on ASB a lot of support by way of like home loan calculators for affordability and other things. Also, we've got things like the Suburb Seeker. So if you know an area you might want to look at, it can help you to see what your first home might look like. So we'll be there to help out. Just reach out and use our sites. So thank you for joining us again tonight. I'm going to end there and hand back to you, Hilary, and I'll join for the Q&A later on.
That's great. Just one question that's come through for you, Craig. Jonathan asks, I intend to use KiwiSaver as a first home purchase deposit. Is it okay to source the entire deposit from KiwiSaver, or would ASB expect me to also have a cash deposit?
Yeah, it depends on your circumstances. You can use the KiwiSaver for your deposit. There's obviously some rules around the amount you can withdraw there, but that gives us evidence that you've got the ability to save and everything else. And so, yes, we would look at that. And best thing is reach out and talk to us and we can help you work through that. But you can use KiwiSaver. It obviously helps. The larger deposit means that you've got more equity and that gives you more options.
Thanks so much, Craig. Thanks for your insights, and we'll get back to you with the Q&A a bit later. Now, we're also delighted to have our Chief Economist, Nick Tuffley, here this evening. He is also coming to you from his home in Auckland. And again, you will witness his stunning CD collection. I'm sorry to get the giggles over the CD collection, but, you know, who has those anymore? Nick shared some fantastic insights last week on the economy and housing market. This week, Nick is going to share an update, especially for our first home buyers. Remember, if you've got any burning questions for Nick, pop those into the Q&A down there, up there. Over to you, Nick.
Oh, thank you very much. And look, I have to say, you know, there's nothing wrong with the 1980s. Some pretty good things happened back there, and I've got some fond memories of it. Now, I'm just going to put up a few slides and just talk about a few things just around the housing market, so that as you're starting on your journey into the housing market and getting a sense for what is this market thing, you'll get a bit of a sense of what you're getting into. Buying your first home is often one of the biggest financial decisions that you will make. It's not all about the financials as well. It's often a very personal choice as well. So without further ado, I'm just going to talk about two things, just the housing market over the long term, give a bit of flavour for what it does over a long period of time. You're likely going to be owning a house for a very, very long period of time. So it's good to get a sense of what it will do and just give you a brief run through different types of interest rate products so that when you're thinking about what to do, when you do get round to buying your house, you've got an idea of some of the options that you do have. So first of all, what have house prices done over a long period of time? I've got some information going back to the early 1960s, which I do want to stress is well before any of your presenters were born. That yellow line is just a house price index, and what it's showing is that, look, over a long period of time, you can see that generally house prices do go up. They go up a little bit like a staircase. Often there'll be some fairly rapid gains for a period, then a period of consolidation for a while, but generally we see prices go up. If you've got population growth and income growth, those two things tend to drive house prices up over a long period of time. Over the last 10 years, you can see prices effectively doubled. At the moment, we're expecting the market to be a little bit soft in the near term, and I'll talk a little bit more about that. You can see at times prices they go through a cycle. You'll see prices will go down for periods at time. And I think the important thing to remember is over the longer term, in a country like New Zealand, where the population will continue to grow, the trend is generally going to be up as well. And there'll be times where you'll be riding out times of softness, just as you have with things like your KiwiSaver, for example, if you've got one of those. So some key things are over time, look, just get used to the fact markets go through cycles, and housing is no different to that. When you're holding on to your house, it doesn't really matter too much what the price is doing in the shorter term anyway, unless you're selling, and even then if you're selling to trade up, you're doing it in the same market as well. But just be aware you're getting into something where there are cycles that it will go through, but the long-term trend we've seen in New Zealand is that prices generally go up over a long period of time. And just very quickly, around much of the country, we're going to see the market have a period where things will be a little bit softer. Now, the thing about a soft market is that when we do our housing confidence survey, which we just put out recently, what we tend to find is in the boom times, that's when people say it's a bad time to buy. There's lots of competition, you're tripping over people, you have to desperately push your price up to try and get hold of the house. When things are a little bit quieter, that's when we tend to find that people are saying it's a good time to buy. And I think that's increasingly the sentiment we'll see over time. There will be more opportunity. You've got less competition as well in a time when people are being cautious as well to find the home that you are really attached to over time. There's potentially no rush. But what you've got to remember is that apart from being a financial decision, it's all about what the house is bringing to you. And if you see your dream house right out there, why not just go in? Now, I'll just give you a little bit of a thought over different types of mortgage rates, because one of the things that you'll be needing to make a decision on when you buy a house is, do I fix or do I float? Which is one of the questions that I usually get asked about late at night at a party. Not that we're allowed to do that at the moment, for my advice on that front. So just some thoughts and considerations that you'll need to think about. We generally have two different types of interest rate products. There's the floating interest rate, and there's the fixed rate. So the floating rate, it just literally bobs up and down with whatever the Reserve Bank is doing with interest rates at the time. So you're facing whatever is there on the day in terms of your interest rate. What you do have is a lot of flexibility. So you can repay debt at any time. If you choose to suddenly fix because you see a juicy rate out there, you can go and do that. So you've got that complete freedom from that regard. But when you fix, what you're doing is you're committing to the bank to pay a set interest rate for a set period of time, say 1 or 2 years, and you've made that commitment that that's what you're going to do. What you get from that is complete certainty for that period of time of exactly what you're going to pay, which is great for getting sleep at night. The flip side is you're giving away that flexibility to be able to, say, do huge amounts of repayments anytime, or suddenly decide that you want to do a different interest rate as well. It can be expensive to break fixed terms depending on the circumstances that you're in. So you do give up some flexibility if you fix. So you're facing a trade-off effectively between fixing can generally cost more than remaining on floating at times. It depends on what you're doing. If things are going through in a weaker market and you're holding it at a higher rate, but you've got to remember is that when you roll off a rate, you can generally be picking up a good bargain. We're going to see a lot of people rolling off fixed rates into some enormously good bargains at the moment. But you need to just bear in mind the trade-offs between flexibility that you can get. The longer you fix for, the more certainty you get, but generally it does come at a higher cost. So that's the trade-off that you're starting to face. So back to you, Hilary.
Thank you so much, Nick. That was really interesting. Just a quick comment from Anthony, who goes, does Nick not know vinyl is king? Any response to that?
Well, I have to admit, I'm still holding on to a lot of cassette tapes that I have. So I probably haven't made it quite back to vinyl, but I've certainly made it back to tapes. My Walkman used to love them. It ate quite a few as well, admittedly.
I cannot believe that. Thank you so much, Nick. We'll come back to you for the Q&A. It's now my pleasure to introduce you to Louise Stiles, ASB Mobile Lending Manager. Now, Louise has been with ASB for 18 years. She hails from the wonderful, the beautiful Winterless Northland region, where she started as a CSO in Dargaville branch. More recently, Louise was a branch manager at Paraparaumu before moving into the mobile lending manager role 2 years ago. So Louise is joining us from her home in Wellington to take us through the steps in the home buying journey. And Louise, it's been a little bit shaky there in Wellington with the earthquakes. I just want to check that you're okay.
Yes, all okay. I've been here for 12 years now, so starting to get used to them, but it was a bit of a reminder because we haven't had one for a while.
Fantastic. Okay, well, now that you're settled in and everything's calm, I'll leave you to it.
Great. Thanks, Hilary, and it's great to be here. Tonight, I'm going to take you through a step-by-step guide to buying your first home. We want to help the first home buyers here tonight who don't know where to start, right through to others who are ready to buy. So in 10 minutes, we won't cover everything in detail, but I will focus on the things I think are most important. Starting out is often the toughest part. When I first did my budget, I didn't even know where all of my money was going, and I really needed to change my spending. I bought my home 3 years ago, and I'd been in KiwiSaver since it started, so at the time, just over 10 years. And when I started to get serious about saving, it took me 18 months to save enough on top of my KiwiSaver for my deposit. One tip I can suggest is focus on reducing debt, especially high interest, because this will impact how much you can borrow. Craig mentioned earlier ASB's affordability calculator, and this is great, along with the repayment calculator, to get a feel for the numbers. This is the first place I send my first home buyers. You'll see here I've listed the upfront costs. You normally need to budget around $3,000, but prices can vary, so build this into your budget. And one thing with ongoing costs, be prepared for regional variances. For example, rates can vary a lot by council, the type of house you buy, and insurance in Auckland is not the same as insurance in Wellington. Once you got your budget sorted, now we can get serious about saving for your deposit. And the big question is, how much do I need? Start by thinking, where do you want to buy and what's the average house price in that area? If the prices are higher than you can afford, you might need to widen your search. With the changes to the LVR restrictions, you still need at least a 10% deposit. So based on the potential purchase price, you can now work out how much you need to save your deposit. There are other options for your deposit, and there's a few ways KiwiSaver can help. First home withdrawal, which you need to be in for 3 years before you can withdraw. You may also be eligible for a KiwiSaver second chance withdrawal. And if you've already bought a house in the past but didn't use your KiwiSaver and you're deemed to be in the same financial position as a first home buyer, you could qualify. It's worth looking into. In KiwiSaver Home Start Grant, the criteria is set out by Kāinga Ora, and you could be eligible for up to $10,000 per applicant, and you can check this out on their website. The most important thing is to check your KiwiSaver is in the right fund for you. This is topical with many KiwiSaver balances being impacted by COVID. The closer you are to needing your KiwiSaver, the safer you need to keep it. If you have less than 2 years to go until you plan to purchase, we'd recommend something like our cash fund to minimise fluctuations in your account. And if you're not sure, you need to talk to your provider. Another option is KiwiBuild, and it pays to register on their website for alerts because that's where you find out about developments that are coming up for sale. There is criteria you need to meet, so again, jump online and do your homework. Sometimes savings on their own won't be enough, and it's tough because not everyone has the help of family who have a home or enough equity in a home to be able to help. But if you can ask for help, there are a few ways this could work. Guarantees. In some cases, we can use a home owned by your parents for security. There are a few conditions that you'd both need to meet. For example, your parents would need to provide their financial position and will be included in the loan application. A guarantee means they are also responsible for some of your loan. Gifting is when you're given funds towards your deposit that don't need to be repaid, and a loan from family could be an option and would need to document it called a deed of acknowledgement. This is completed by your solicitor. Co-buying doesn't happen that often, however, it is something you could consider. This is where you purchase a home with another party, which involves a property share agreement, and this outlines the percentage of the property each party owns. For these options, we recommend you get independent legal advice. The next step is the approval process and getting a pre-approval. This is valid for up to 3 months and gives you the confidence to know your buying power and also what conditions might apply. There are 3 parts to a full loan approval, and the first 2 parts make up the pre-approval. First, we need to get to know you. We will need valid photo ID, proof of address, and proof of your income. Next, we'll assess your financial position. Here we'll need evidence of your deposit, a breakdown of your living expenses, any outstanding debts, and if you're new to ASB, your banking history. The third part of the approval process is all about the home you're looking to buy, and we'll talk about the sale and purchase agreement shortly. It's quite likely at this point you won't have this. Right, once we've got the pre-approval, let the property search begin. One of the things I learned pretty quickly is what you set out to buy might not be what you end up buying. I found open homes hard because nothing ticked the boxes. One house we did end up making an offer on. It was far from perfect, but it was in a great location. This house ended up going for $100,000 more than what we offered, and that was tough. We ended up changing our plans and building, and that's a whole other story. But the point is, it's not what we set out to do. So I learned how important it was to keep an open mind and be resilient. When you're house hunting, be clear on your must-have list and consider what you can be flexible on. At open homes, start rating the property against that list. Like, does it have insulation? How is it heated? Is it close to shops, transport, and school zones? There are different property types to choose from and different types of land ownership to consider. And this is important. Depending on what you buy will determine the supporting documents and different conditions that might apply to your loan. I've got a customer who I'm working with at the moment. We've now completed 3 pre-approvals in the past 2 months for different property types. They initially put an offer in on a house, then an apartment, and now they're looking to buy a house off the plans. The point is, you need to work with your lender and keep in contact so we can help. Once you've found a home, it's time to make an offer. There are 4 ways to buy a house in New Zealand: offer and negotiation, tender, auction, and buying a home with KiwiBuild. To make an offer, you'll receive a sale and purchase agreement. And this is the written contract between the vendor, that's the seller, and the purchaser. This will be you, usually handled by the real estate agent and a solicitor. When you make the offer, it will either be conditional. So for example, it could include conditions like getting a building report, confirming your finance, or organising a LIM, or an unconditional offer. And it's exactly that, no conditions attached. You still need to complete your due diligence and ensure your solicitor is involved, as you'll be legally bound to complete the purchase if your offer is accepted. What's important is to get the house checked out. These checks are in place to protect you and will identify the things you will need to consider when making your offer. And finally, you've made an offer on a property and it's been accepted and we're ready to buy. Now we need to get a full loan approval. And this is the third and final step in the approval process. It's at this point we would have received all of your supporting documentation and your conditions have been met. So now it's time to organise your home loan. Work with your bank to negotiate a good deal. For me, it's all about the relationship you have and working with someone you trust. You need to feel confident we're doing our best to look after you. There are a few factors we take into account when negotiating, like your total relationship with ASB and your deposit, for example. Benefits could include fee waivers, cashback payments, and special interest rates. We do offer an ASB First Home Saver bonus, and I've had several of my customers take advantage of this. We'll give you $1,500 back after your loan settles with us. This is on top of any other cash offer you might already have in place. Your immediate goal at this point is to get into a house. And when you think about the term and repayments, you might want to consider at what age you want to be debt-free. With your home loan, understanding what suits you, your budget, and your goals is important. I see a lot of these decisions are rate and term driven. So we can talk you through fixed or floating, revolving credit, or a combination. Protecting your income and your lifestyle becomes even more important when you're making such a big purchase. To give you an idea, the average cost of a comprehensive protection plan is around $1,500 per year or $50 a fortnight. And the final step is settlement, and there are a few things you need to do before this happens. Get your house insurance sorted now that you've got your move-in date. Meet with your solicitor to sign your loan documents once these have been prepared, and make sure you make time to complete any final inspections of the property before handover. Settlement day is when the purchase price, less any deposit you've already paid, is paid to the vendor and the title transfers to you. Most of the work here is done in behind the scenes by your solicitor, and ultimately they will make the payment for your new home. Once settlement has taken place, your solicitor or real estate agent will contact you and you can finally pick up the keys. Right, so that's been a whirlwind tour of the home buying journey, and if there were two key messages I could leave you with, if you're starting out and trying to build your deposit, your budget will be the difference. Little changes in your spending and looking into your deposit options can mean owning your first home sooner. And there's a lot to consider when you buy your first home, and it's never too early to talk to your bank. From saving for your deposit right through to settlement, we're here to help you every step of the way. Now, I know we've covered a lot, so I'm happy to answer your questions. If you haven't already, just pop them in the Q&A section and I'll come back to you. Thanks, Hilary.
Thank you so much, Louise. Just before you go, a little birdie told me that you and your husband Aidan actually own a craft beer brewery, Tony Balin's Brewery. So you better tell us what your favourite beer is.
Yeah, my favourite beer would have to be our Van der Sar. It's our Russian Imperial Stout, a dessert beer, you could say, and I may have to enjoy one of those tonight after this.
I never knew there was such a thing as a dessert beer. I love it. We'll come back to you a little bit later for the Q&A. Right now, we are delighted to have Bryan Thomson, Managing Director for Harcourts New Zealand, join us this evening. Bryan, originally from sunny Nelson, is joining us from his home in Auckland. He brings a wealth of experience to our panel this evening with almost 20 years in the real estate industry. We're excited to hear Bryan's views on what's happening with real estate for first home buyers as we navigate these alert levels. Remember, if you've got any burning questions, put them in the Q&A box down there, up there. Right now, over to you, Bryan.
Thanks very much, Hilary. And to be precise, I'm actually from a little valley about 20 kilometres south of Murchison, from a dairy farm. So while I did go to school in Nelson and work there for some time, I'm very proud to be a boy from Murchison. Some people on this call will not know where that is, but it's about 100 miles south of Nelson at the top of the South Island. I've been fortunate enough to work all over New Zealand in a range of different areas in the real estate market, and really thankful to be invited to talk to the ASB team that are on line listening tonight. This is a great thing because buying your first home, getting on the home ownership ladder, changes your life. It changes your family's life and it changes your future. And for those of us who are old enough to remember, we went right back to when we used to get taught that sort of stuff at school, Hilary. So it's good that ASB are doing this here tonight, and thank you for the invitation. Real estate is New Zealand's national sport. We think we're great at rugby, we think we do okay at cricket and triathlon and yachting, but the reality is real estate is our national sport, and at homes, hotels and bars and cafes and workplaces all around the country, it is the #1 topic of conversation when people want to talk about the real estate market. And when you're looking to get into the market as a first home buyer, it can be exceptionally confusing because there is such a range of information being given by what seems to be highly qualified individuals who've got a great opinion, each of them, as to what's going to happen. You have at one end of the scale people running around at the moment saying the sky is falling, and fluffing their feathers up, and people at the other end of the scale saying buy immediately, the market's going to get stronger. What do you do? Who do you believe? Who do you listen to when you're looking to make a decision? The information confusion that exists in the real estate market can be challenging. Speculation doesn't help anyone. My view is you've got to look at the facts that actually impact on the market when you're looking to buy or not, or indeed sell. And the facts are really simple. At the moment, interest rates are at levels that I never thought I'd see in my lifetime. When Leanne and I purchased our first home, built it actually in Ashburton and Tynwald, just south of the Ashburton River, I think we paid 14% when we borrowed our money to build that home. I have friends who paid up to 21%. and we've never seen interest rates like this that we've got before at the moment. So that's a great thing for all of us who are looking to buy property right at the moment. But it's also a great thing for those of us who actually own property, because it means holding costs are very low. So with the challenging times employment-wise that we have in New Zealand at the moment, and indeed around the world, it means that the possibility of being in trouble and being forced to sell a property when you don't want to are less than if interest rates were higher and holding costs were higher. I also would say this to you about the real estate market. If you watch the news either on your computer or on television, or read in the print media like some of us older people do, I'd challenge you to find a better place in the world where you'd rather live than New Zealand, because we're the best country in the world. We always have been, and there are many beautiful places around the world, but no one has the conditions that we have right at the moment, where we're safe, we're secure, and it's a place that people want to come to. So that gives the real estate market great strength. If you look at what's happening in the market right at the moment, you would say, would you buy or would you not? Well, my view is this: people don't buy real estate on a whim. The vast majority of people who buy real estate buy it because they want a home for themselves or their families. It's a long-term purchase, so you can be sure that what you're doing at the moment is something that people have been doing for decades and decades, centuries indeed. People say, what's going to happen to the market? Another fact for you, if you wish: if you look at recent challenging times, the global financial crisis, the Christchurch earthquakes, or even go back to the late 90s with the Asian crisis, the graphs that we saw from our earlier speakers prove to you that while there is a challenge every now and then in the real estate market, price-wise, there may be a slight movement downwards. It turns around and picks up again. People soon move back on with their lives, because if you're going to be a human being, you move forward. You don't sit back and wait. So facts from my point of view is the market's fine. Now, if you look at what's actually happening in the market right now and how it works, we went into lockdown at the end of March with a very, very strong real estate market where buyers outnumbered sellers. March was one of the biggest months we've ever had in the history of New Zealand in regard to the number of sales and the way prices were, properties were rapidly moving. During lockdown, sales continued to be made, albeit at a very low level. Many of them properties that had been viewed before lockdown, but also properties purchased sight unseen during lockdown. Since we've moved to level 3 and now into level 2, there is no question that the reality of the market is that buyers are very active and sellers have been a little bit slower to come to the market. So we have an excess of demand over supply in many locations. Now, I know we have guests this evening from right across New Zealand, so there are one or two markets that are very tourism orientated where it's a little bit more challenging for sellers perhaps than it might be in some of the bigger cities. But in general across New Zealand, buyers are active and very positive. Our sales team in the field are receiving many inquiries, auctions are working well, and multiple offers are occurring on other properties. So the supply versus demand equation right at the moment would suggest that there is not enough property to satisfy the demand from the buyers. That's a day by day equation, but that's certainly where we are at the moment. So confident in the market, yes. Predicting what will happen in the future is not something I get involved with. I look at the past, because the best predictor of future behaviour is past behaviour in the same context. People buy houses because they want a home for themselves or their family, or they have a long-term investment aspiration. That will not change no matter what the economy does to us. So for first home buyers who are looking to purchase a property, what's the advice I would give to each and every one of you? It's actually similar to the advice I'd give to buyers no matter what stage you're at. Number one thing I'd say to you is do your preparation well. Talk to the banking institution you deal with, obviously ASB. Get your financial criteria in place. Make sure you identify how much you can and will spend on the property, and make sure you know exactly what that highest limit is, because as a first home buyer, you will be on, more than likely be on a bank imposed limit about how much you can borrow. Conversely, people buying at the upper end of the market are often on a self-imposed limit. That is, they can pay whatever they like, but they set a limit themselves. So make sure you do your prep, you know what you can spend and what you will spend. Do your property research, and it's so easy nowadays. If you go to realestate.co.nz, as the #1 portal in New Zealand, search the type of property you're looking to buy, search the locations you'd like to buy, and so that you build up some IP in regard to the marketplace, so you know what is available and what it would cost. I'd give very strong advice that you be flexible on your location. Most people, when they buy property, buy location first and price second. as a first home buyer, you may well have aspirations to live in the suburb that you grew up in, but that might not be financially possible. If you can look at a general location where you would like to be, maybe find one suburb and then research suburbs on the outside of that one specific suburb, it will give you far greater choice of property. Maybe you'll be able to identify an aspirational suburb where prices may grow over time as a city gentrifies itself. So do your research. The next point is something that's absolutely critical, and we see hamstringing a lot of buyers who are new into the marketplace, and that is be very, very careful who you look to or listen to for advice. Everyone in New Zealand likes to think they know about the real estate market, and often well-meaning friends or family members or associates will try to help you with advice about how to buy a property. Now, sometimes that advice is very valid, but we see multiple times and again where people's advice stops buyers buying property so that they don't make a mistake, whereas often the buyer wishes to buy a property and there isn't a risk and they should move ahead. So be really careful who you take advice from. If someone is going to advise you about buying property, I would suggest it would be best if they've bought a number of properties themselves. You need to make sure you're getting good intellectual property. When you go in the market, what you need to think about is it a good time to buy? Well, real estate purchasing and selling is not about timing. It's not about timing the market, because you can't. If any human being could actually tell you when the bottom of the market is, they wouldn't be on a webinar tonight. They'd own hundreds and hundreds of properties and be worth multi-million dollars, because they would have bought everything at the bottom end and sold it at the top. It's all about time in the market. So go to the market strong, positive and confident. Find a property that meets your key criteria and purchase it. It was said by one of our speakers earlier on, make sure you understand what your no compromise piece of a property is, and make sure you've got as limited number of must-haves as you can and be flexible. Leanne and I built our first home. We lived with no carpets on the concrete floor for some time. We had calico sheets hanging on the windows because we couldn't afford drapes, and we didn't build a garage for a couple of years because we wanted to get in. So make sure you're flexible on your location and flexible on the type of property you can buy. Last 2 points I'll say to you is this: find a real estate agent that you like and trust. People do business with people they like and trust, and if you secure yourself with a member of the real estate profession, and I can tell you now, no matter what anyone else will tell you, our industry is populated by wonderful people, and they will do their very best to assist you. Trust them, take their advice, tell them what you're trying to achieve, and they will move heaven and earth to try and assist you to achieve your aims. If you're worried about what the market's going to do, I'll tell you this: if you buy a property right now and it goes down in value 5% and you decide to sell it, you're likely selling it to buy another property. The one that you'll be buying will have dropped just the same amount, so your buying power has stayed the same. And that's the key thing, that once you're in the market, you're fully protected unless you panic and bail out. And that's not what you do, because we're buying property for our friends, for our families, for our own accommodation. And I can tell you clearly that owning the property you live in will change your life, it will change your family's life, it will change your lifestyle, and it will change your outlook on the future. It's the most wonderful thing you can ever do for yourself, or indeed for your children if you're in a position to help them. Warren Buffett's one of the wealthiest people in the world, and he said that you should be fearful when other people are brave, and you should be brave when other people are frightened. There are a lot of people running around at the moment talking about real estate who do not have the facts, who are basing what they're thinking on unfounded opinions and are fearful. If you want some advice from me, I don't think there's ever been a better time in the history of the world to be looking to buy your first home. Once you've got it, you'll think, why didn't I do it sooner? Good luck to all of you.
Thank you so much. That was really insightful, and I tell you what, it's probably excited a lot of people who are just dying to get out there and buy a house. And I have to say, you clearly are the best thing to come out of Murchison in a long, long time. Thank you so much. Just to let everybody know, we're going to do our Q&A now for the rest of the time that we have together. And a lot of you have submitted questions when you registered for this get together, and also we're getting questions through live. So I will start on some of the questions that were sent through upon registration, and one of them is first for you, Craig. Are banks less likely to lend to first home buyers considering weaker equity and risk profiles compared to investors in the current market? That's from Bhavesh in Wellington.
Hi, Vivesh. Fantastic question. As I shared in the opening, 1 in 5 of all the home loans we do in ASB are first home buyers, and that hasn't changed. And right now, with the removal of the loan to value restrictions, which means if you've got a smaller deposit, we've got a bit more flexibility to help you. We're always going to be responsible for you and for us in terms of making sure you can afford to repay it. So if you've got a little bit less deposit, sometimes that means you've got a little bit less flexibility in the property you're looking at, but it might mean you're paying back a bit more because the loan's bigger. So we'll always look at your ability to repay. But right now, ASB, we've got opportunities to help first home buyers, and so reach out to us and we'll help you out.
Louise, a question from Claire in Auckland. If you're self-employed, what do we need to provide ASB to be eligible for a home loan?
Right, Claire. So the pre-approval process is the same if you're self-employed, but I think what can be different is the supporting information you need around your income. And this will change depending on the nature of your business. I've recently helped a self-employed customer who is a builder and he's a contractor. He's only been contracting for 11 months. And I've been able to help him with a pre-approval to purchase and just using some IRD documentation. So it just definitely does pay to reach out to one of us. We're always mindful of making sure you can afford your repayments, and we'll work with you how we can confirm your income.
Thank you for that. Nick, one for you from Rachel. She wants to know, what are the indicators that drive market speculation?
I guess speculation is essentially an activity where you're doing something out of the view that the price of something will simply go up. You're not really paying much attention to the reasons why it might go up. You're just jumping in there and hoping that you can buy something and potentially sell it to someone else at a higher price. So look, we tend to go into those sort of stages of speculation in a market when markets have been hot for a very long time, and that's encouraging people who are in to just buy something on the hope that the price will keep going up. So we do tend to see that in share markets when they're frothy. We can get that in housing markets at time when they've been having a very hot period where people just feel they need to get into it because everybody else is getting into it and they don't want to miss out. So it's a bit different from, say, investment, where you're looking at, I would class investment as where you're looking at how you can make a return over a long period, particularly, say, out of the rental returns on something. And particularly if you are buying as a homeowner, remember the main reason you're buying as a homeowner is you want somewhere secure and stable to live in, and you're buying for that to hold over a long period of time and get the benefits out of the ownership. So speculation, the signs of it is generally when you're seeing that market's running hot for a time, and you're often getting a lot of those, I guess, all companies popping up telling you about why you should be buying a property now, and here's the 13 ways to do it. And I've bought 50 properties in the last 2 days, and are really rich, and just sharing my knowledge with you. So those are some of the signs of things overheating a little bit. We're certainly not in the market where I think we're getting lots of people speculating at the moment.
Bryan, a question from you that's come in live from Nash. How do you actually figure out what a property is actually worth?
So it's a really interesting question. There are multiple ways of trying to assess what a property might be worth. You can invest in a registered valuer who will go through. You can talk to a real estate agent who can do a comparative market analysis for you. And both of those options, what they really do is look at all of the sales that have been made in the past, compare them to the property you're looking at, and make an assessment where they believe that property might sit, taking into account current listing stock that's on the market and comparing the property to those. So they will give you an estimate about what the property might sell for, but be very clear it's a might sell for, because the people who sold and bought the properties that are being compared to the one you're looking at, they're no longer in the market. So it's a best estimate that can be made. It doesn't mean that's what the property will actually sell for. It means that is the price band where it more than likely sits. The interesting thing is that when you have a property that hits the market and perhaps generates significant competitive interest, and it sells for significantly more than what the appraised price was prior to the sale, after it's sold, it then becomes one of the properties that's compared to what properties might sell for in the future. But the best way you can find out what a property may sell for, talk to your real estate estate sales consultant, your real estate agent, and get them to do an appraisal of the property and give you the information around it. The Real Estate Institute of New Zealand has the most up-to-date live data on sales and listings that are available in New Zealand, and that's the best information to judge it on. So speak to your real estate agent, and if you want, you can pay for a registered valuation for a registered valuer if you would like.
Question for you, Craig. What advice could you offer to first home buyers in the current market? That's from Christine.
Yeah, hi Christine. First thing is, I think as we've shared through all panelists, get a good support crew around you. So somebody who's going to help you out in terms of just think through the options. Speak to your bank early on in terms of knowing therefore what amount can you borrow from the bank, so you're there, you know what you're targeting in terms of your house. And then be very clear, I think as we've said here, in terms of what you really want to achieve. And if you know that when you're then looking at the houses, you know what you're targeting, and you've got a greater chance. And if you find that house right now that meets all your boxes, remember house prices go up and down. If it's right for you now, you're confident in your own situation, then there's never a wrong time to buy.
Fantastic, thank you for that. Another question for Louise. This is from Pirihira. Wants to know, what are things that stop the bank giving you a home loan? I forgot to transfer money to pay a direct debit of $130. So what are the effects of that?
Great question. So when I covered off under the approval process, I did touch on this, that we do look into your banking history. So if you generally manage things really well and you've missed one payment as a one-off, hey, we can all make mistakes forgetting to transfer the money. So potentially it's not too much of a big deal. This is where, again, understanding your financial position is vitally important, because perhaps if it's happening a little bit more often, we don't want to set you up to fail or go into any hardship. So it's check with one of us. We can help you through the process and, you know, help you with what you can do for your first home.
Thank you so much. Nick, question for you from Melissa in Wellington. Do you have any regional insights you could share for first home buyers? Where could be the best region for first home buyers to buy?
I think that the where often also depends on whether you're living in it, obviously, as well, because you've got a lot around what you are doing in terms of where your job is, which will be dictating to a degree where you're living. But putting that aside, I think when I'm sort of putting my very muddy crystal ball to work at the moment, we're going to see some generally most of the country moving a bit in uniform, because we're all getting impacted at the moment by what's happening with COVID and the impact on the economy. There'll be some regional differences that shape through. So take Wellington as an example. It's basically the base of central government, so it's likely to be a lot more stable than other markets, because there will be a lot of very, very, very busy people around central Wellington, for example, who will be continuing to work hard over the next little while. I'd say there's some chunks of the South Island where the population will be relatively stable because there's less of an impact on immigration. Auckland is a place where there's a fair amount of immigration that will be slowing up, and that will potentially put a little bit of pressure on the market, but at the same time it's also been trying to get enough homes for everybody who's cramming into the city as well, so that will help things out. So probably one thing that will be a bit more noticeable is around those areas that are very exposed to tourism, such as Queenstown and Wanaka are places where we're likely to see more price pressure than others. But on the other hand, that may also be a good opportunity to go and look and find somewhere cheap to have a holiday over time as well.
Thanks for that. Bryan, a question for you, and this may be something that the other panellists might like to pick up on too. This is from Craig and Debbie. What are the things we need to consider as parents wanting to help our kids get into their first homes? So I'll throw it to you, Bryan, but if anybody else would like to pick up on that.
I think when you look at trying to assist family members into your home, it's really difficult sometimes when you're helping people make a decision to spend all of your time trying to stop them making a mistake rather than help them make a decision and move forward. So I think you need to make a decision. Are you just a financier and they make their own decisions about the property they wish to buy, where they want to buy it, the style of property? Or are you going to be the parents who are going to be with them at every property inspection and try and pick their house for them? And I think that's a discussion that needs to be had right up front. as to what sort of support team you are going to be. It's not right or wrong either way. It'll depend on how your family dynamics work as much as anything. I think the second thing that I would say is that if you are assisting members of your family into a property, you need to make sure you've taken really, really good legal advice in regard to how that loan is going to be structured, what's going to happen to it, because while we all hope that relationships stay together, families stay friends for the rest of their lives, the simple reality is that we see over time sometimes where a family puts money into helping a child and their partner into a property and the relationship ends. All of a sudden, how does the money work out if you haven't got the legal structure of that worked out correctly? And how do you make sure that if you have more than one child that you're not putting yourselves in a position where you could be accused of playing favourites? So I think exactly what I said before about being a buyer in the marketplace, you need to do your homework before you leap in and say that's a great house, here's a cheque for the deposit, or here's a guarantee, because you certainly don't want to see yourself down the track after a parent has worked their whole lives to put themselves in a strong position, all of a sudden see a major financial challenge for the son or the daughter, and then the guarantee comes into play and it affects everyone. So do your homework up front, get the legal structure right.
Thanks, Bryan. I really feel like I want to throw this to Craig, because he's already said that he's got children.
I've got a bank of dads sort of been called on, but I think Bryan makes the right call there, right? To have the discussion up front in terms of why you want to help, because it's such a great thing you can do if you can help your children into their first home. And you want to do it in a way that you're not putting yourself in difficulty, so that you're supporting. So if you want to go into shared ownership, have that discussion. If you want to provide actual deposit finance, then that's a different situation in terms to work through. But look, I think for a lot of us as parents, that's a wonderful thing, right? I got into my first home because my wife's grandparents helped us with our deposit. We wouldn't have been able to achieve that. And so this is the opportunity to pay back. It's just do that sensibly. So your kids just hang out there, we'll help you out soon.
I'll be relieved to hear that. Thanks so much. A question from Sarah to Nick. With the great interest rates and the market looking so attractive, will we be seeing a large influx of first home buyers all looking for houses in a similar price range? And how will that affect prices? That's a good question.
Well, I think the reality is that the next sort of while, the conditions are going to be really good for first home buyers, because certainly the market's not one where prices are galloping away on you for starters, and interest rates are really low. And a time when some people are potentially being cautious means that that's just a greater chance of you finding the right house for you and not having someone bid it and take it out from underneath you as well. So like, I think we will likely see over time, I think a greater share of first home buyers coming into the market, whilst other people are being a little bit more cautious as well. This is a time where we will start seeing people come in as bargain hunters and look for what's on offer over the next little while. So what does that do? Yes, you tend to see first home buyers and investors congregating, say, in the bottom third of the market from a price point of view. So it may help put quite a floor under prices at those levels as well. And that's the thing to bear in mind, is if everybody's trying to go through the same door at the same time, that tends to have a bit of an impact. So it may just help keep the market steady at that point, but I'm sure that we'll see lots of people out there looking for a bargain over the next year.
Thanks, Nick. Question for Louise from Amelia. I'm using my KiwiSaver for my deposit. With the market changes this year, how do I make sure I don't lose my deposit?
Yeah, hi Amelia, great question again. So we did touch on this in my presentation, just around KiwiSaver and thinking about the last couple of months, especially how balances have changed. You know, this is the time you do need to be making sure you're in the right fund, and also think about your time frame. So when is it you want to buy your first home? Again, going through a review, so checking in with one of us. We've got tools on our website as well that can help you choose the right fund. That's just the vital step to cover off at this point.
Fantastic.
Just picking up on Louise's point there, Hilary. So when Louise is talking, for those on the call, about the right fund, if you're short term, for example, we'd say put it in the conservative fund. And actually, when the markets were going through those large gyrations, the conservative funds were less impacted. So that helps people on the first thing, that when it comes to the time, sit down and talk to us, because people who had that option, and I remember speaking to a person in one of our branches who had that left us a friend then recommended to go into the higher growth fund, and they lost some of their deposit. So they've got their ambition and what there was. So do have your support crew to give you the advice, because it's there to help protect your goal and your funds.
Thanks for that. Question for Bryan. Actually, there are a couple of questions that are very similar here, both from Grace and Michael. They say, Michael says, what are the most important risks to be aware of as a first home buyer? And Grace says, what are the big things to avoid buying your first home?
Yeah, well, I think the number one advice I would give when you're looking for a first home specifically is if you've done all your homework up front and you know what your upper limit is, then that's a logic part done. The buying of the property is actually the emotional part. So when you go to purchase a property, the best thing you can do is to work out what your must-haves and non-negotiables in the property are, and all of the things you'd like to have, and then redo the list and cross out as many of the must-haves as you can, because that will mean that you might want a 3-bedroom, 2-bathroom house, but you can see that you can buy a 2-bedroom one with a decent lounge and 1 bathroom, and it will get you on the ladder and away you can go. You might want a lovely new home in a great street in the area you've always wanted to buy in, but perhaps there's an older one where you can almost do a bit of sweat equity to make the property better and improve it when you're there. I mean, Leanne and I never intended to build a house when we went to Ashburton, but we did. And I swore after the experience I'd never build another house until I had an unlimited budget. It was an absolute nightmare. But work out what you're actually looking for, and have as few non-negotiables as possible. If you ask the question, what shouldn't you do? You should not buy a property without getting a building inspection done. If you purchase a property where there is a fault within that property that either needs to be rectified immediately, or indeed over time, it will have a dramatic impact on your financial position, because you've probably stretched yourself like a Shanghai to buy your property and you won't have spare funds. And it also, if there's an issue with the property that hasn't been identified in a LIM report that can't be rectified, that will be very difficult for you when you come to sell it. So you've got to do your homework. But the number one thing is you need to be confident. Faint heart never won a fair lady, Hilary, as you well know. So when you go into the marketplace as a purchaser at any level, do your homework, get a really good real estate agent alongside you, and you need to get on the front foot and go in confident, because you're not in the market in isolation. There's an old real estate truism that when one person wants a property, 3 people want it. So make sure you go in prepared to compete. And if you've got the right person alongside you, it's a heck of a lot of fun.
You're a heck of a lot of fun. Okay, last question. This one's for you, Nick Tuffley. Damien from Otago wants to know, what are your OCR forecasts, and what do you think the impact will be on residential interest rates in the second half of 2020?
Okay, so we think the official cash rate will basically remain where it is, with a small chance that it does fall next year. So in a nutshell, low. It's not the only thing that matters these days. Reserve Bank's doing all sorts of things like purchasing government bonds to push interest rates down. So we've got to think more broadly these days. But in short, we'd expect mortgage rates, in my view, to be sort of roughly where they are, possibly slightly lower if the Reserve Bank wants to push them down a bit further. My key message would be is over the next 2 to 3 years, expect mortgage rates to be very, very low, and eventually when they do go up, it's not going to be that far, and it's going to be a slow process.
Good advice. Thank you so much, Craig, Nick, Louise and Bryan. This wraps up the formal part of the evening, and it's been really, really informative. Craig shared that ASB is open for business, how ASB is there to help our first home buyers achieve their goal of home ownership. Nick gave us his thoughts on the first home buyer market and what to consider moving forward while you're looking to buy. Louise gave us an insight into what to expect in the home buying journey and how important it is to work with your bank. Open comms, no matter where you are in the process. They can help you understand and feel confident about everything there is to know. And Bryan, he was very entertaining, but he also provided insights on what's happening in real estate at this time and what to look out for when you're looking for your first home. So some wonderful advice from all of our panelists this evening. The third and final episode in ASB's Home Ownership series is next Thursday. As a homeowner, there's a lot to consider in the current environment. So do join us next week to hear from the team at ASB, to hear their views on the things that homeowners should be thinking about at this time. From buying investment property to renovating your home to buying a holiday home, we've got you covered. So do register via the website. We would love your feedback too on how you think we went tonight, and you'll receive a survey to share your thoughts. Be kind, don't be too rude, particularly about the host. Please know that the team at ASB is here to help, so you can also request for one of our friendly team members to give you a call too. And great news, our guest speakers and I will be sticking around. We'll be available to answer your questions in the Q&A section for the next half hour. So do stay online, pop your questions in the Q&A section. We're ready to go and we're looking forward to it. Otherwise, thank you so much for joining us. It's been my absolute pleasure being your host for the evening. We hope you found tonight really, really valuable. Whether you're starting to save or ready to buy, the team at ASB are here to help you on your home buying journey. Enjoy your night, everybody. Lovely to see you. Cheerio.